In this episode, we're talking with Cathie Crampton from Belle Property Corporate, and we're going to explore the changing landscape of property management across the country. We'll look at which states have had the most amount of legislative change. I think we all know that Victoria tops that list, and how these laws are impacting property managers and landlords, otherwise known as rental property providers in some states. And we'll discuss the unintended consequences, how tenancy legislation can backfire and ultimately hurt the people it's designed to help.
Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent and buyer's agent mentor, co-host of Foxtel's Location Australia, author of Auction Ready and co-host of Your First Home Buyer Guide.
And I'm Chris Bates, mortgage broker, recently ranked number 5 in Australia out of over 18,000 brokers in the annual MPA Top 100 Mortgage Broker Awards. Before we get started, I need to let you know that nothing we say here can be taken as personal advice. We always recommend you engage the services of an appropriate and experienced professional.
Our guest today is Cathie Crampton, the National Head of Property Management Growth and Performance at Belle Property Corporate. Cathie's property management career has spanned 2 decades across all national markets, and in her current role, she works with agency principals at the business level to help them optimise and grow their property management businesses. She is truly passionate about real estate. I've met her at a number of conferences and events, and she has forged a successful career as a highly respected member of the industry. It's unusual to come across somebody in the property management space who has both a broad exposure to national markets as well as the understanding what's happening on the ground. So we're really looking forward to this discussion. Cathie, welcome, and thanks for coming on The Elephant in the Room.
Thank you, Veronica. Appreciate being here.
Cathie, I mean, it's been a roller coaster for renters over the last few years. Everything all the way winding back to COVID and all the rules that have changed, and the rental crisis in terms of the difficulties of rent and rent increases. But the property managers are often forgotten about here. How tough has it been for them over this period? Going over the last few years.
Yes, well, I think the rental crisis encapsulates all aspects. There is clearly a chronic, or has been, and we'll talk about some of the stats that are suggesting a change here, but there's been a chronic shortage of housing for people who need it, and that is terrible. And everybody, most people who are practitioners are empathetic to that. But for the poor property manager, they genuinely have been the piggy in the middle. Like, they have been caught up in this on so many levels. They initially, I think there was massive anxiety within our communities. We had COVID, so let's think about COVID. So that created all this anxiety. Sure. The poor old property managers in almost every state were not given guidance in a timely fashion. At that moment, I was actually running a rent roll in Brisbane. We had about 6,000 properties, and, we were making it up as we went along. And I don't mean that badly. I was producing videos, pushing out to my team because they weren't, sure what they needed to be doing and saying. So I think not only was there a lack of guidance, but equally, people just became so, unfortunately, demanding of what they wanted to try and understand, because there was this anxiety with our clients, both owners and tenants. So you got massive anxiety all around, massive challenges for the PMs. At that point in time, too, they were not well paid and often not well educated. I am not suggesting our PM community are unintelligent. By educated, I mean there wasn't a lot of, specific requirements around licensing and that. Okay, so, they were challenged in terms of problem solving and, their ability to articulate. And, I just think they had it super tough. And there was massive, massive exodus out of the industry. I think at one point,
that's interesting.
Victoria lost 35% of its workforce in, sort of a 9-month period.
Wow.
So it's, and I can remember, and I was at the stage of that earlier working at Place Group in Brisbane. And I remember a study tour coming up from Victoria, I think it was just after COVID. And these were, I won't say who, but these were very seasoned people sitting at the table running massive rent rolls, like 15,000, that sort of thing. Okay, massive. And they had head in hand going, we just don't know what to do about it. Like, wow. I just think if everybody was so adversely affected, and I think we've had to, we can talk about this, but we've had to massively rethink and reshape how the property management businesses work in order to create a new type of PM. The old type's gone.
Definitely want to get into that because that, that's sort of change, challenges result in change across industries, of course, and that's one of the things that's structure of businesses and all sorts of things are being impacted there, and a lot of experimentation, I think, too. But let's just firstly discuss some of the recent legislation and compliance requirements that have come into place across the country. I mean, we can start with Victoria, could probably go to Queensland, New South Wales, and then elsewhere. And in fact, we're recording this at the end of October. We'll be going to air in November. And even just today or yesterday, the Victorian government's come out announcing even more tenancy legislation, which is quite astounding.
Absolutely.
So do you want to hit us with sort of, I guess, a synopsis of what challenges, what's been imposed? And some of this, obviously, I'm not to say that tenant-friendly legislation shouldn't be enacted, but let's be real about it. Let's have a good look.
Yeah, so there are across, you see it nationally, and some states in Australia are more legislatively orientated than others. So, for example, you tend to see the way it usually actually starts in WA or SA, and they were actually the first to have the requirements around licensing and that sort of thing. They're highly regulated markets. The Eastern Coast is slower, or it's more entrepreneurial typically, and so you don't see those legislative requirements as quickly. However, in a couple of years ago, post-COVID, I think the government, I'm not a political person, but I think the government has been quite woeful in their ability to foresee and take responsibility for housing requirements for the mass population. As a result, they have pushed regulation and the responsibility of housing all to the private landlord, okay, so the mum and dad investor, who in most cases are just trying to create something to their future. So we're seeing regulations such as, you effectively can't say no to a pet in a property without good reason. That good reason typically is around whether or not it's a suitable pet for the property, but there's very strict timelines around when you have to respond to the request by, which in most markets is 14 days. I think in one market might be 21. That, I would say to you, is probably a reasonable request. Again, I'm not trying to alienate any owners who may be listening. I am an owner as well of a rental property, so I understand. But the reality is that most people now are moving with pets, and there are a mass number of people who will never purchase a property. I had a conversation with someone last night who runs a rent roll in Brisbane, about 1,300 properties. She said, I'll never buy a property. But she's got a good job and so on. But so I think pets is probably a normal one. Things that are really difficult for landlords are things around these minimum housing standards.
Yeah.
And places like Victoria and the ACT have very strong positions on that, which are actually financially such an encumbrance for the clients. That's why we're seeing the selling. When they brought those standards into the ACT, for example, they lost 3,000 rental properties within a space of 12 months. And that is a highly transient market, right? That a lot of people need to rent there. In Victoria, I'm sorry to say I can't give you the exact number, but I know that most rent rolls, because I just did a recent benchmarking study within Victoria, have shrunk between 5 and 12%, some as much as 20%.
Wow.
So if you extrapolate that out to the number of available rental properties, it's shrinking. And then reading an article that came out today, I thought it was very insightful, and that was around these proposed changes the Victorian government want to add yet again. And I am concerned, for people and the viability of them owning a rental property. So I think what the government has done, unfortunately, with their lack of taking responsibility for this matter before and their vote self-serving sort of behaviour, is that they are alienating the very people that they need. Not strategic at all. The mum and dad investor keeps the backbone of this country going.
Yeah, it's an interesting one, because I wonder about the state government's own housing stock. So, they do provide social housing, and I wonder how much of their own stock actually fulfills those, inhabitability standards that they impose on individual landlords. The other thing too is that, and it was something that I picked up at the PIPA conference, which was only last week, that and a lot of commentators will say, well, so what? If investors are selling and an owner and a first home buyer buys, then so what? Or if an upgrader buys it and then a first home buyer buys their house, so what? It's just dwelling for dwelling, whether it's an owner occupier or a tenant, who cares? But I think what they're forgetting is that some tenants will never, ever buy.
Correct.
And so they are competing for an ever shrinking stock level, amount of stock. But not only that, the actual formation of tenants or of rental dwellings, so the amount of people that live in a rental dwelling is actually higher than the amount of people that live in an owner-occupier. I didn't actually really tweak to that until last week.
We've seen that trend now. So this affordability pinch, and this is impacting both tenants and owners. Okay, so from a tenant perspective, this affordability pinch really hit about 9 months ago. And as much as we're only now seeing inflation start to drop, I think it came out yesterday, it was like 2.8%. When it comes out like that, I'm not an economist, but when it comes out like that, I can tell you everyone's running out of money. Like this is not a good place to be. So what we are seeing though is we've seen that consolidation of households now for a good 9 months. We've seen anecdotally, it's because as much as I'm in a corporate role now, I actually go into businesses every day, and we are seeing that there are less people attending open homes. The rate of rental increases now is dropped back. I saw some information on the weekend where the average rent in the majority of Sydney suburbs now has come back 10%. Okay, whilst it's risen 39% 2020, now we're seeing that reduction, the affordability peak. So this is coming at a time, because it's not evil landlords, but this is coming at a time when owners have got all this additional obligation, particularly what they're bringing in Victoria, and they don't actually have the freedom to manage the tenancy in terms of the occupancy in a way that is serving the equation at hand. So they've removed, the no ground removal for the no grounds
eviction.
Eviction. And again, I'm not anti-tenant at all, but then, so this is the owner has all the risk and the owner has all of the responsibility, but has no rights over the property that they're paying for at a time when some properties are devaluing, where rents won't now continue to go up at the rate that they have. We've had that correction. So I think it's a really tough set of circumstances, and the government needs to lay the more accuracy on it.
Cathie, can you look at your, obviously the rental books across the whole Belle network? I mean, you've got the place experience. You probably know what's going on there as well. But, have you seen a huge reduction in, the turnover rate? I mean, yes, there's new investors entering, and absolutely you might be increasing your market share and things like that.
Yeah.
But if you had to sort of do a like for like, the people who had the properties, pre-COVID and the people who have still got them post, is there a huge reduction in people that are, instead of selling the home, they've sold their investment properties? Can you?
Oh, yes. Look, I don't like to pass data that's probably not my data to broadcast, but in a previous role, let me put it that way, we had a reduction of 5% across the group, so net, and this is 18 months ago, and I think it's been worse, okay? And in the flagship office of that group, we sold, of the turnover in sales for that office, which is a flagship office, 25% of their revenue came off the rent roll.
Right.
So that tells people are selling off their investment properties.
Yeah.
Yeah. So, and even in Belle, we see that.
And I know that there's not a huge amount of sympathy out there for real estate agents. I am one. I put my hand up when I say that, but I am one, people. But, they go, oh, that's a shame.
Oh, yeah.
The reality is, though, that if a business has a rent roll, that's its asset, right? And you're selling off your 20%, 25% of the sales revenue is effectively cannibalizing your asset.
Absolutely. Selling the farm, we call it.
Yeah, so it's not good for business. I mean, it's yes, you prefer to sell it rather than have one of your competitors sell it, but at the end of the day, you don't want to see that rent roll shrinking like that.
No.
And like you're talking about, yes, that there's now less people going through open houses, and there is rental growth has slowed, and we know that it's come out in the data, national data as well, across there's different jurisdictions, obviously different amounts. And some people will be going, well, that's a good thing. That's a good thing. Rental growth is slowed. That's an excellent thing, But I guess you're coming at it from a increased pressures on landlords, and you're suggesting that more will sell as a consequence.
Yes.
Is that what you're saying?
I think there'll be more selling. I think what's masked the impact of it till recently is that we had these increasing rents. Okay, so we hadn't had this market correction for a while. And, that meant that most business owners were realising more revenue, but not probably paying that detailed attention to the size of the asset. But that has stopped now. So, but the selling is continuing because it's too expensive to hold it. you speak to a lot of savvy financial investors and they're like, the yields aren't there. And now you've got yields of 1.5% or 2% instead of 3.5%, 4%. I think the average nationally is still about 3.5%, but, that's including all your regional markets and all your more, investor orientated sort of markets. So yes, I think there is increasingly likely that we will see more selling off of those assets. That decreases the opportunity for tenants to have somewhere to call home. It is, when you're talking about property managers too and the retention of property managers, what really taxes the PMs is the constant in and out of properties. So when people move in and out, the ingoings, the vacates, the bonds, that sort of thing. So you're going to see that kind of pressure sitting on people that are already, in a lot of cases, relatively new to the industry. And I think that's putting increased pressure on business owners as well to go, look, I want an asset, but how do I create a steady team, to keep running that asset?
Yeah, I mean, look, there's obviously those financial pressures on agencies. You've had rising property management wages, staff shortages, increased compliance. There's costs involved in that, shrinking rent rolls due to investors selling. I mean, how can a business owner respond in a way that really makes good business sense? What is changing in terms of the structure of these businesses?
I think it's pretty important for business owners to educate themselves around what makes a good rent roll. Okay, so at different sizes, you need a different staffing level. And the thing to understand about your rent roll is what we call the capacity of the rent roll. And that means the capacity that sits in there that the team member can manage. All right? Because it is it's a high volume, low margin type of business. Good rent rolls will run at about 25, 30%, sometimes in excess of that. So a solid business, and they have the asset value. But the businesses that I see that run like that measure absolutely everything, and they make all their decisions, in essence, around whether or not the business can support it, okay? So I think that understanding, first of all, what makes a good rent roll, I think that getting the BDMs operating, so your organic engine, needs to be operating so that it's replacing your churn. So churn is where, not to get too detailed, but churn is where you lose managements, not necessarily to another agent, because generally you could sell them, move in, whatever.
Yep.
So if you can get your BDMs replacing that, then of course any acquisitions you might make are strategically orientated. Because acquisition is expensive now. We're running commercial rate 7 to 9%. You've got to pay them back. The average tenure of a management in a business is typically about 18 months at the moment. So you typically haven't paid it off at 18 months. You know what I mean? So you need to be pretty savvy with your measuring and your nurturing and those sorts of things. And as I said, the capacity piece. The best way to improve or optimize the capacity in your business is to utilize your technology well. Now, that doesn't mean don't have a human. Okay? That just means, in every business I've stepped into so far I think there's only one business I've stepped into where they were using their platform well.
Right.
And have a look at what's costing you money in the business. Maybe trust accounting is a big expense for you. Do you actually need a trust account? That's a big question.
Yeah.
And there's lots of ways to run them so that they're running more lean. I always say, keep them lean, keep them clean. That's that's a good rent roll usually.
There's a lot of prop tech in that space trying to come up with lovely solutions for the property management industry. I know it's a highly populated space. Yeah. Let's talk. I think Chris had a question there that I jumped in. Did you have a question on that?
Oh, I was just curious. You mentioned very early about the new property manager and what you've sort of had to really improve, I guess. How big has the improvement been over the last few years? And what as a consumer using it by a property manager, what sort of some of the things they're going to see that are working much better for them as investors?
Yes. Well, I want to say everything's working better. I'm going to say to you, I think it's still an exception rather than a rule.
Okay.
So there are apps out there that will give, there's two things. There's three massive shifts I've seen, and there's an area that I think we still have massive improvement needed. Okay. The three big shifts are around how money is moving.
Okay.
And even whether whether you're a tenant or whether you're an owner, having access and transparency to your money, so instant access and transparency over the money journey is really important. And So, there's products like ALO and Colmy and so on that are doing trustless type solutions. Property Me has their Me Pay solution, which is fabulous. Like they're out there, they're working. Okay. So I think that's the big shift, and I would love to see more shift in that direction. The second thing that I think is working really well is technology that can utilize AI to do things like your inspections and, your vacates and ingoings, because if you speak to any property manager, they say, oh my God, it takes me 6 hours to do a 4-bedroom ingoing, and it's like, okay, well, how about we just get a camera and flip it around and AI writes the script and you check it over and, loves your uncle. I mean, there's things, I see some businesses working like that. I've seen the rise of the professional property manager since COVID in particular, and that's that PM who is largely an in-office PM. They're probably earning $120,000 a year. That's not uncommon now. And they are the ones who speak to the client and essentially guide the client. Now, on that note, unfortunately, I don't think at the moment that is still the majority of our PM fraternity. Not necessarily their fault. I think the educating that we've been doing, we have a big line between the kind of business education we do at places like Business and Real Estate. I don't know if Veronica, if you went to that one, it's a very good conference.
Yeah, I did.
There's a very big difference between the kind of conversation we're having there and the typical conversation at a PM level conference, okay, which is still largely, here's a new product and, how do I manage my time? And you know what I mean? It's a little bit more pedestrian. I'm not, again, trying to be critical. I just think we have still a long way to go in educating the people that we employ to have the right conversation with the client. So they should, for example, none of us are economists, but all of us are reading information around what's trending at the moment in the market, and we can apply that to how somebody should operate their investment. In other words, well, I could have told you 6 months ago that rents were coming off the peak because I could see, and anecdotally I'm hearing affordability, that sort of thing. You're seeing the inflation rate start to come down. Those things tell us there's not as much money going out, okay? You all like lifestyle. So my advice, had I been a senior PM to a client, would be, we window of time here to put the rent at market rent, because I would advise that we have a 12-month lease, and you know what I mean, and buy them that surety. Does that make sense?
Yeah, and on that, because that's an interesting one, because those conversations around where the rent sits and managing that and coming to the end of the lease and et cetera are becoming more and more important, aren't they? Because where you've got no grounds, the abolishment of no grounds terminations, and also in Queensland where you've got the rents can only be increased once a year per property. It's not even like if you had a 6-month lease and then somebody vacates, you can then reset to market rent. And John Cunningham said this to me. We were debating around the no grounds eviction legislation. He said it's going to take kindness out of property management.
Yes.
And you obviously get what he meant there. Do you want to elaborate on what that means?
Yeah. I think that it will become absolutely a mercurial or a financial transaction. That actually isn't serving the interests that was intended by more tenant-friendly, legislation. It's actually become the reverse. See, what's happened is there's too much interference in what's actually traditionally been an agreement. Okay, supply and demand, here's the agreement. We accept the terms and we operate to those terms for this period. Because there's so much interference, I think it is taking the kindness out. There won't be the latitude, because they've got the owner and or the PM have got such defined grounds now on what they can and can't do that they just can't be malleable around it. The piece that a lot of people miss in property management is it's not black and white. You can't legislate for every dynamic that sits in PM. In fact, the best businesses, the best PMs navigate the grey. And their ability to navigate that, have the right conversation around it, come to resolution. And this legislation removes it, doesn't it? The more we're prescriptive.
Yeah, and one of the sort of instances where that might apply is like, quite often here that my clients in particular are like, look, I like to keep the rent low when I know I've got a great tenant, and I'll happily have them on below market rent because I want them to stay. The problem is then if ever it gets too far away from market rent, they're in a real problem. If they can't actually, it's they're not able to bring it up to market rent at any point in an easy way when it gets too far away. And also they can't actually terminate that tenant and remarket because to reset that. So that's one of the areas where kindness and discretion it'd be bad practice to do that.
Absolutely. And there were instances previously too where people would stagger rent increases. Okay. And now you can't do that, can you? You can't even accommodate somebody's circumstances to try and elevate that. And, the other challenge is that it actually devalues the asset for the owner. And that's a problem because, you go and get new valuation, you want to refinance your property, off your 7% interest rate. As they start, very difficult because your asset's going to slightly devalue based on that rent. Valuers look at that as one of the components. So it's a real challenge for everybody. I think that the legislation has genuinely gone too far across all of the states. Poor old New South Wales, they don't even have the grounds that Queensland's got to finalise tenancies.
Really? And Queensland's, they've put some interesting legislation. And I think that one increase per property a year shows a real lack of understanding of the way the market works. And who is that protecting?
Oh, I know. Watch this space, though. They just got a Liberal government, so we'll see.
Yeah, I guess. But, but that's sort of weird too because currently the way it is, somebody could sign up for a lease where the rent is, this much today and built into the lease is a rental increase, which may not actually be fair market rent at that point of time if rents go down. So it's sort of a bit of a strange way of looking at it as well.
They don't always think everything through up there. There's always a little bit of retrospective adjustment in Queensland, I found.
There's another one that's changed up there, the 2-week maximum holding deposit. So, I think but I was at the Pippa conference and Corinne Bowen from Image Property was saying that one that actually hurts people who don't have references, like if they're just sold a house, for example, or perhaps they're moving here from overseas. They don't have a nice bank of past property managers that will give them a reference. So often they might have actually said, look, I'm prepared to prepay 3 months rent as a gesture of showing my goodwill here, but they will no longer be able to do that.
Correct. Yeah, so I think this is what I mean. This is this constant lack of navigating of the grades, lack of understanding of the dynamics of the industry. And in many cases when legislative changes have been made in recent times, there's been very poor consults with representation of the industry. Antonia Mercerella did an amazing job when the first lot of reforms came through, her and the REIQ in Queensland. I was just at an operating rent roll up there at the time, and they really made so much noise that, the industry got a voice at the table. But unfortunately for poor old Victoria, they weren't even invited to the table. So it's just very difficult circumstances. I think it'll be interesting to see, they talk about governments changing on the voice of crime, but I think we will see a lot more challenge now. I think the housing space, tenants are definitely challenged, as I said earlier, around scarcity of supply and around opportunity, and nobody's disrespecting that, at all. And owners are increasingly challenged around the cost and potential viability of holding an investment. So what they've done is they've broken up the equation that actually holds the fabric together. So I think we'll see a lot of change still.
I'm on a personal mission to help more people make better property decisions, and you can find out all about what I'm working on at veronicamorgan.com.au. There you will find resources for first home buyers, details about my buyer's agent mentoring program, information about my newest project, Preferential, proactive property management in Sydney, or if you're looking to buy your dream home or investment property in Sydney's inner west, eastern suburbs or lower North Shore, you can connect with my team at Good Deeds Property Buyers. And if you'd like a 30% discount plus free postage for my book Auction Ready, How to Buy Property at Auction Even Though You're Scared Shitless, and yes, I'm a potty mouth, use the code ELEPHANT at the checkout.
If you're looking to buy your first home, thinking of upgrading to a new home, or purchasing an investment property anywhere in Australia, we would love to carefully guide you through this journey and importantly get the finance right. Please reach out to myself and the team at flintgroup.au. Cathie, is there any certain pockets? I mean, you've got a bigger, almost a national network, I guess. And certain pockets where, from a renter's point of view, things are looking quite rosy, right? There's a lot of new investors, for example, the Perth and the Adelaides, and
Perth's good.
Yeah, is there any pockets where the opposite's happening though, where really the agent's saying, "Hang on a sec, every day I'm just getting a call, another house off the rent roll, another house off the rent roll," which might be good for their sales, right? They're getting the the listings because the investor's bailing. Ultimately, if you fast forward and if that trend continues, you're going to see some real pockets around the country where renting is much harder than it was, say, 5-10 years ago.
Yes, we're not seeing that. So to your first point, absolutely Perth, Adelaide, and particularly Perth. Everybody wants to invest in Perth. At the moment, and that's typical. Okay, so it tends to come over from WA and then it goes back. Okay, so that'll finish too. But the particularly pockets of New South Wales, Northern Beaches, we're seeing a lot of people. It's not viable. The yields aren't there. So you're seeing those types of environments where yes, people, don't buy back in. They're moving there. They don't rent them out. See a little bit of that. I'm not seeing any rent rolls yet within the Belle Group where, the assets shrinking to the point that, they're half the size. I did see that in a rent roll in Brisbane, actually, about 18 months ago, where it halved within 18 months. I saw another one at South Brisbane. It wasn't one of ours at the time, but another one in South Brisbane lost 25% of the size of the rent roll. I think we will definitely see that in different pockets. I just haven't seen it yet. But, it would logically, you're going to say, well, there's pockets of Sydney, lower North Shore, perhaps some of the eastern suburbs, those northern beaches, those lifestyle areas, where we'll see that because it's too expensive to buy back in. It doesn't make sense.
Well, I think a lot of those houses that have been offered for rent in those areas haven't necessarily always been or were purchased with the intent of being an investment property. They might have been accidental, investments. The new investor's not going to shell out the amount of money that's required to buy one of those just to put it on at a 2 or 3%, rental yield. Right. I mean, obviously, we encourage investors to buy for growth, capital growth, and there's not a lot of investors that are prepared to. That's effectively land. I mean, it's not exactly land banking, but you're buying a chunky asset and you're able to hold it with very minimal income from that asset.
Yes.
And that's an unusual investor, right? And I think that type of, the family home on the rental market is going to be a dying breed, I would think.
Absolutely, because they say the biggest transfer of wealth is intergenerational wealth. But if we think about these housing standards that have come in now, it's actually not practical for people to hold a number of these assets in that form. So even buying it to rent, for a period of time until you renovate it or something like that. That's unfortunately, they're not going to be able to do that anymore. So that's going to remove a percentage of stock again.
And that's important because what that's going to do is take out stock that is being affordable. We know that our state governments have had a declining investment in social housing for the last 7 decades.
Yes.
And so therefore people on those growing waiting lists have been forced, if they are low, have low incomes, have been forced to rent pretty shitty properties. And I'm not justifying the fact that that's what's happened. But the reality is that where are they going to, if those properties then have to the owners are forced to actually invest in improving and upgrading them, those properties will then appeal to a tenant who's got more money to pay rent. Right. And it's not about even the landlord saying they're going to charge more. It's just simply the fact that previously that didn't appeal to that affluent sort of tenant before. And that's going to change. That's going to actually put more pressure on people that really need housing, I would think.
Absolutely, it will. And I think that the pressure we also haven't considered, aside from availability of stock, is that, like every market, it's a bit like the cigarette market. They put all these taxes on it, I think, and then suddenly we had this underground cigarette market. There was an article on it recently.
Yes.
Don't smoke, by the way, but just FYI. but I watched the news. But anyway, but even from a rental perspective, even these homes that, are perhaps, they're fitting a particular market segment. Somebody's buying it, renovate it later. Perhaps they're going to move it in 2 or 3 years. They're adequate, but perhaps they're not meeting every standard, like recycle aircon and control heating and whatever. Those properties too will go to an underground rental type market. Like it'll become that private landlord, which is very difficult to regulate.
Oh my God, yes.
I'm not anti-private landlord, but often a lot of those stories you see on the news, let me put it like that, which is very commercial, are not typically agent situations. Okay, they're often these private landlord situations, and I think we'll see a little bit more of that too. That's more dangerous for a tenant. Right. So I just don't really know how it's serving these poor tenants.
Cathie, there was a big disruption. Every industry's gone through this, right? And I think the property management, you don't need a property manager.
yes.
What value to that? Let's just pay some tech platform. Do you think you've seen the death of that sort of prop tech?
Well, they all went broke.
Yeah.
It's like that.
No, a lot of them did, to be honest, and a lot of them, they've taken the tech approach to, I've come from the tech industry, and I'm going to come in and disrupt property management. They're worth 4 times the rent roll. They're a great asset. Banks will lend on it. How hard could it be? Do you think that that's sort of been proven now with these companies coming in, because it's actually a really tough business, but a lot of people think a bit naive.
Okay. I still think there is a market for self-managing via these platforms. Like that, they're like the Yabonzas and, that's the people that came in. I think there is a market segment that loves that. I mean, I have a good friend of mine that just recently purchased a house. I appreciate this is sale, not rent. But he said his selection of bank was based purely on the fact he only wanted to deal online. He didn't want to deal with a person. And there are that segment of the market who don't, find time wasting communicating. There is absolutely a market for it. I think that property management needed disrupting, and I still think it needs a level of disruption, because I still don't think at this point, and I'm talking collectively, that we are delivering all of the advice that a client needs, wants, sees value in. Okay. So I still think there's a lift up we need to have. So I think that we're the piece that Puritan approach, as in all tech approach, in other words, no human, no person, is probably not the best scenario. It's a combination of a good advisory oriented person with well optimized tech. Like to go and physically, I'm not saying, even to coordinate repairs. Well, why can't somebody just jump on a portal, send their own photographs? Why can't the tech just automatically pump out the, quote request to the trade? The trade can then, go back and offer 3 times that they can visit the property via the tech. Like all of that is just so logical, it makes sense to me. And keep it transparent. It automatically can add to the property, in terms of the flow, the ledgers. To me, that seems quite straightforward. So the answer to the question, Chris, is I don't think we've seen the end of the pure tech solutions in PM. I think most of the time those companies come into Australia to test their products in our market. We're not actually intended as the end game. We're different. We're different when a bit astray, unfortunately, is that they tried to operate an on-the-ground model. I think they just went too hard too quick, like that Uber style model that they were trying to do. But they were definitely disrupting there for a while, and I was running that all the time, and there were people in my environment that were kind of looking up going, oh, I've just lost this property for, this fee to different and what have you. So there's a place for it. I'm not saying they're the answer. I think they are a good education piece for the traditional PM to say, hey, how do I need to up my game and have a different type of conversation with the client?
It is interesting because a lot of these proptech solutions seem to be born out of one person's poor experience. I can do a better job, and the next minute they're investing a lot of money and other people agree with them, and then it's like, oh, it doesn't really work. But what about within a business? Because typically you've had portfolio managers, one property manager that runs, X amount of 200 managements, 250 managements. And now some businesses are going for this sort of the assembly line, the task-based structure. So it's like, you build a model forward in a factory.
Yes.
What are your thoughts on reorganising, I guess, the way in which property management is done? Forget about tech for a minute, and obviously tech-enabled in many cases, but what are your thoughts on that?
Yeah. I've run lots of those models. And as your businesses get bigger, to keep them efficient, to keep them profitable, but also to offer your team areas to grow, you need a career path, to retain people and to expand their skill sets and so on. You actually need to run scalable models. So those part task, part, in-office, out-of-office models, I'm a big advocate for them.
Mm-hmm.
Now, the assembly line piece you're referring to, this all, like they Yeah,
So they
there's a
build
different
workflows
person.
and think that it's
Yeah.
a linear process.
It's tricky because it really is reliant on superb workflow.
And
Haven't
nothing going
seen
wrong.
superb. And it's also reliant on a communication level that is seamless. Okay. Now, that's such rare air. You see it, but it's rare air. And what tends to happen, whether you have a portfolio style or not, is the client is frustrated when they are dealing with somebody who doesn't have the information.
Yeah.
Okay. And unfortunately, most of the products that we all use require you to enter the information. So there's a little bit of all of that. But the answer to it is that as you scale, to offer opportunity for team, to offer profit back to the business, and to offer a client experience that is effective, you do need to segment the tasks. I like in-office, out-of-office, and I like, I call it growing my own babies, which clearly I don't grow now, but I like growing, people up and bringing them in as cadets and, sort of starting them in like a field service capacity, and then you can start to grow them up, the career pathway. And so I'm quite strong with that. Yeah, so it ends up being in-office, out-of-office cadet sort of model.
And it does take a property management is a different beast to, say, a sales agent. And I know a lot of people seem to think that property management is the babies for sales agencies, but they don't necessarily possess the same skills or demeanour, do they?
No, there's a lot of talk. You still hear a lot of talk, both sides, but, a lot of principals will still say, I just want to hear them get on the phone. But the problem with the level of regulation and things is that people unfortunately have to document things, and it's pretty rare still to find that property manager who'll get on the phone, have the conversation, and then document it effectively, but via confirmation, So that's still a bit of a challenge for the industry, but they're not the same mindset. They're not wired the same as the typical salesperson. And yeah, so there's a lot of that kind of challenge. But as I said, the more that the industry becomes professionalized, I said earlier about the rise of a professional PM, the better the wages we see, the better the education expectation, the more that we see clear career pathways for property management personnel. I think that the less that disconnect will be evident, okay, because they operate like a professional person. I just ran a BDM session today. We had about 110 there, from across the group, just for BDM. So there's definitely passion. And I think whilst people would like to earn more money, the wages are sort of 25% higher than they were 4 years ago. So, it's definitely lifting.
Yeah.
So I think there's great opportunity. I mean, I've been really fortunate. Yes, I've worked hard, but I've had great opportunity in my career. So you can create a pathway.
I think a lot of property managers sort of at that, I guess, owners of property management businesses, shall we say, at that sort of higher end of professionalism, certainly when I've been talking to them, they're really focused on building up that skill level of property managers, be an advisor.
Yes.
And it is actually quite interesting because certainly a lot of them seem to be going into the property investment advice space, which is unregulated. And it does concern me actually. Quite often I hear some of the advice that these people give and I'm like, oh, Jesus, that's not good advice. That's actually really bad advice. So
yes,
as the industry matures and as the people within it sort of seek to lift their game and be able to provide better advisory role or advisory service to their clients, I'm hoping that they start to recognise that they don't actually know much about property investment. They might know how to manage a property in their area, but, in terms of overall investment advice, that's a danger zone. And equally, when you ask a sales, you go looking at a property and sales agents will say, oh, it's a great investment. And I'll be like, tell me more about that. What makes it a great investment? Oh, because it'll rent well. And they don't even talk about yield. They just it'll rent well. And it's like, well, that's interesting because that's
sufficient. Look, it's, there's because we're talking about a consumer, where a consumer sees value, and then we're talking about the capability of the person who's delivering the experience.
Yeah.
Okay? We have a responsibility probably as an industry and perhaps as, leaders in the industry, and I'm talking about business owners as well, to provide that type of education. I remember years ago getting what was then my accountant in Brisbane, and he runs quite a big business, supports a lot of real estate agencies. So I had him come in and teach us about yield and teach us about what does capital appreciation mean and, those sorts of things. So does it need to become a requirement in CPD that you do a course of that nature? Do we need to have, because there's not even a component in the registration or in the license that you do any of that, right? So
I know, and buyers agents do the same course, and they don't know, they don't let it either. So
there's some, like I said, there's in there. I don't know. I just think there's definitely some opportunity there. If we as a business owner know that our clients are expecting us to have a different type of conversation, we need to train our property management professionals to have a conversation to the point that is reasonable, okay? And then we need to have some relationship with somebody that perhaps can take the conversation to another level and perhaps do that, assessment of a property. Like, it just be a formula, okay? Like, it's, whether the property suits investment or doesn't suit investment, what's the rate of capital appreciation of that, location or that product in that location. It's fairly, you don't need to get fanciful. You just got to have sort of 3 or 4 key things that we dropped in a template and, a bit of a disclaimer. But I do think we aren't taking responsibility, though, to even educate to what the client would like to see and where they see value. And the other danger that we haven't highlighted around that, because we don't do it at the moment well, is that we are seeing still a little bit of a reduction in management fee averages across the country.
Yeah.
So for those that might not know, management fee is what the agency collects as their gross revenue. Obviously, it's not their profit. The challenge with that being reducing, yes, rents have gone up a little bit, but remember, I said that that's stopping now. That's going to stop now for a few years, and we'll probably see a little bit more correction, and then it'll normalise. But that just means that the revenue is starting to also decrease. So then how do we keep everybody employed? How do we keep them all paid?
Yeah.
How do we support that provision of housing? So there's sort of a, we need to be able to substantiate value. And, it's one thing for people to over-regulate the industry, but how about they support regulation in a way that also adds value to the industry?
Cathie, have you got a property dumbo to finish us off with today?
Oh, I have got a dumbo, yes. I can never forget this. In fact, I was in Brisbane just the other day and went past the very property where this happened, and I still think about this situation. Had a situation where we were managing a property on the Brisbane River. It was worth, it was a nice substantial property. And the tenant made application, which was fine, normal process. I didn't sort of cite this level of detail typically, but tenant made application. The tenant was on remand for armed robbery. And was wearing a, what do you call it, around their ankles?
Ankle bracelet.
That's the one, ankle. It looks like a mobile phone to anybody who hasn't seen one of those ankle monitors. And again, everybody should be treated respectfully and fairly. But when this particular applicant put in their, payslip, it was a forged payslip. And it was evident that it was a forged payslip because it didn't have an accruing amount, when you get paid, and you've been paid X amount in this period. So the short of it is that the tenant made that application fraudulent payslip. The references were his sister and somebody else. The particular person who approved everything was a very young person and didn't probably see those alert signals. Does that make sense?
Yeah. The red flags weren't
there. Anyway, the tenant went in. First I knew about it was when the lawyer for the owners corporation was sitting downstairs in the office going, "We're going to sue you for not taking due care." Oops. And as I'm walking down the stairs, I'm going, "What's going on here? Like, what happened?" I'm trying to ready myself for this conversation. So I thought, anyway, we managed to unwind that, but it took a conversation I had to have with the tenant. We had to cover, obviously, on the moving costs, the bond, like we were able to, move them on. But I think and it was a bit frightening because this person was a drug dealer. So anyway, the challenge around that, I think that the dumbo act, if you like, is that if just keep stay looking, keep a clear head about what you're dealing with. If it doesn't seem right, ask a question, elevate it to get more clarity. I'm not suggesting that the person in that situation, the young person who processed everything, is to blame per se. I think it touched three sets of hands in the end, actually. And there were other people who probably should ask the question, but that to me was that was just people just rubber stamping something and moving it on to the next stage. And I think that was not a smart way to operate. Yeah.
Yeah. I encourage people to consider using a proactive property manager when you've got someone who's just, a bit blasé, and you want someone who's really got a bit of a nose for, what may or may not be a great tenant.
I think,
and we could have a huge conversation around tenants as well, because, it's almost like tenants are the untouchables at the minute. You can't talk about where tenants do things badly, and they do.
Absolutely.
But equally, the majority, I would think, wouldn't. And likewise with landlords, there seems to be a lot of rhetoric around about how bad landlords are around. But again, there are some bad landlords, absolutely, but it's certainly not the bulk of landlords or rental property providers, as we're meant to be calling them now.
We remember that name, don't we? No, it's not the majority. The majority of situations are, they're professional, they're respectful, and they're conducted within the realms of reasonableness. I think where it's becoming super challenging now, unfortunately, is because it is just so difficult for both parties to operate in a way that's reasonable.
Yeah.
It's really difficult. So I think in terms of the future of PM, unfortunately, we will see it become somewhat more clinical, because unfortunately it's not being given a choice, and that doesn't serve the interest of either party. So it's a bit of an unfortunate state of affairs. So I'm not trying to be doom and gloom, but there's always a way through these things. And I suspect that we'll see a little bit of moderation of the regulations. At the end of the day, they have to be enforced. I think that the market is going to moderate the cost of things. That will take noise away, because that's what's creating the noise. And, maybe we'll see some of these advocacy bodies that are a little bit one-dimensional may diminish in their, the strength of their voice, so that it leaves reasonableness for everybody.
So it appears the pendulum is yet to return to the middle, into middle ground.
No, it's not middle yet, but it is shifting back. When you see triggers like unemployment rates and inflation rates, and I don't want to see someone unemployed. I've got two very close friends who have both lost jobs in recent weeks. I don't like to see that, but when you start to see that little bit of correcting, you know that things are becoming a little bit more moderate. That serves everybody.
Cathie, that's been a really fascinating chat. I don't think we've tackled enough this property management side of things in this podcast, actually, and it's been really good. So I really appreciate you coming along.
Thank you.
We'll have to get you back at some future point with a bit of an update. So thank you.
You're welcome. Thanks for having me.
Cheers.
If you have a question that you'd like us to answer in an upcoming Q&A episode, you can send us a voicemail or written question via the website, theelephantintheroom.com.au, or you can email us directly at questions@theelephantintheroom.com.au. If you like what you're hearing, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars would be great. I know that sounds a bit cringy, but we have it on good authority that every review helps make it easier for other people to find out about us and hear what our amazing guests have to say.